Okay. So yeah, like I was saying, for example, if they were on an uptrend here, we won't do too much of these things I taught in the last class because actually we are done with it. Okay, just fill in the gaps yourself. We are done with that. So just like in the chat, and unfortunately, it's not giving us block price action like that. So now this is the last strong low created, and this low gets taken. I'm explaining range in the practical chart. This low gets taken out with the body of the candle. Okay. Now the high, this high that took out this low, once price gives three, this which is higher. I don't think which is higher. Okay. One, this did not break structure, it did not take out the previous low. This took out the previous low. So one, this did not break structure, it did not take out the previous low. What about this? Did it take care with the body of the candle? Yes. Two, this is not a valid external. This guy is above them. This is not break structure. Look, this is not break. This is broke. Three. Once we have three externals created after a change of character, this high becomes a range high. And if price starts clearing transactional liquidity, it goes back to the range high. It clears transactional liquidity to the range high. Then let's assume that this is the only highest point that price has created. It's safe to say that this is simply a new all-time high if peradventure it gets here and it takes it out, and this is the only way high available. The price created a new all-time high. It got to the point where it has never gotten to before. It surpassed the previous high. If there are no more highs, we can't really see a lot of data because this is what it is. Okay, but it still remains the same. All of these turns to transactional liquidity once the first external fails. As simple as that. The original place where the trend started from is the range. And if we have, for example, we have this, and then let's say we have this to our last external, and this external gets taken out, and price break structure three times. One, two, three. This low becomes the range low. Now it is now range low versus range high, clearing transactional liquidities. Whichever wins becomes the strong person. If this high fails to take out this high and it gets to this point and it retraces, this low becomes a failure swing, a failed point, a weak low entirely. This range low that even when price will clear transactional liquidity is low, it is still going to be classified as a weak low. Why? Because it failed to take out this high. Because why would price get to this point and not take out this high? So with that being said, that is all for range. I've given a lot of explanation in the other class. I'm just like making it a bit practical. The same thing as order flow. Order flow is simply price movement in a particular direction without an interruption. A particular direction without an interruption. When price fails to interrupt the when I mean interruption, when price does not go below a, this, for example, an uptrend, it doesn't go below this low. It is moving without an interruption. Let's proceed. So the next we have the topic. Okay, I think we did not do one liquidity, which was our structural liquidity, I guess. Okay, so we'll be treating the structural liquidity, then we'll move into discount and premium prices, POIs and entry. Then the next class is just risk management techniques, top-down analysis, and that is all. So today we'll treat the remaining liquidity we did not do. In an internal, I have told you, in an internal series, once you get your external like this, you want like structure your external, every break of structure inside of it. When you want to mark out your external, go to the 4 hours above to mark out your external. Then don't stay in the 4 hours to mark out your internals. Go after marking it out like this. Go to the 30 minutes or 1 hour or 15 minutes, whatever you want to combine with. But 4 hours and 15 minutes does not go. 4 hours and 30 minutes go. 4 hours, 1 hour go. 15 minutes and 1 hour cannot go. 1 hour and 5 minutes can go. 1 hour for external, 5 minutes for internals. For scalping, for a better win rate is 4 hours and 30 minutes or 1 hour. So you don't mark your internals from the higher time frame. Go down to that corresponding time frame to mark out your internals, but mark out your external in the original higher time frame. Then we have the most recent internal is called an inducement. The most recent internal is called an inducement, while the second is called a disruption. Many people were mistaking what I want to explain as structural liquidity now as internals. Please be mindful of what you are doing. Now, structural liquidity is the minor break or structure you find inside internal your internals. Yeah, it's not your internal liquidity. Simply the little break of structures you find inside your internals. Many people will see, just like this guy is here. Let's use this as an example. Now, this is our inducement, for example. Now, some people will mark this thing here as inducement and mark this one as disruption. That's wrong. It's a full leg structure. Now, the qualification of a proper external must have 3 or more internals in it. How do I mean? Now, for a point to be called an external, it should have 3, 1, 2, 3 or more internals before breaking structure to be classified as an external. You should have 3 or more internals in it, because why would it be called an external when it does not have an internal? It needs to have an internal to be called an external. because it is that internal movement before breaking the last high that was created that will be called those movements that will be called an external one leg. So the first qualification of every external should be that it should have an internal. Then not compulsory, but it should take out an internal. When I mean take out an internal. Now you know that if this is a one leg structure of an external, it means that on the other hand, there are series of internals that moved like this here before this guy moved here. Okay, because this another flow that was simply moving before this happened. So it should take out one or more internals. This one is not compulsory, but compulsorily it should have three or more internals in it. Then the qualification of an internal, it should create structural liquidities inside of it. What is the structural liquidity? It should create minor break or structures inside of that internal. After you mark your one leg like that, you mark out your internals inside of one leg. Then inside that internals, there should be minor break or structure. Now we have two type of break or structure that can occur inside the internal that can be called a structural liquidity. Number one, break or structure with the candle break or structure where a candle stays while another goes below it, whether wick or body goes below it, then another goes above it. This is also a break or structure. It is very, very obvious. Now, this can happen with candles. Whether this one close above it with wick or body is not our concern, but it should close above it. This thing now is if we go to like if this is 30 minutes time frame, if we go to the 5 minute or 3 minutes time frame, it will be like the normal movement like this, so many candles, so many candles, so many candles, and then it closes and it breaks structure. But because it's 30 minutes, it will now be looking like um the break of structure with the candle. The same thing as even that break of structure you see on 30 minutes. If you go to like the daily time frame, it will appear as the structural liquidity of three candles made it up. So what do I mean? A structural liquidity can be in two form. Number one, it can be in the candle format, or it can be just a normal movement of series of candle inside an internal. How do we know a valid internal? It must have structural liquidity inside of it. Then on probability, it must sweep a structural liquidity. Sweep I mean is when we have a let's assume we have an inducement here. All these break of structure inside here are structural liquidity. Now, for this one to be called an inducement, it should at least sweep one or more, like take out one or more while retracing that retracement leg before it moves, must take out one or more, then create structural liquidity inside it, whether the candle type, anyhow, before breaking structure. Let's go into the chart to check it out. So, um, this chart is not clear enough. There are examples, but I just need something really better. Okay, let's use this. For those that don't understand, the reason why we cannot classify this as an internal is because it failed to take out. This was the last law created. It did not take out this last law. So the candle or the break of structure that occurred here was with this one. So we will be giving credit to what? To these people instead, not these people. Take notes. But that's not actually why I came here. Mm. Okay, let's use I'm seeing a lot of examples, but they are not beginners friendly. I just need something really straightforward. Here's the chat I just left. I want to show you that okay, let's use this one. So these are series of internals. As you can see, swept this guy off, break structure. Now this guy cannot be called this, like this thing here cannot be called an internal. Instead, anything that is not an internal in this 30 minutes time frame where you came to take your entry is classified as a structural liquidity, and they are not even to be considered to be traded at all. So we have this instead. Then all of these now, you see that it took out the structural liquidity. But what I'm saying, and all of these guys inside here are minor, like little bit of structure that occur. I will show you the one that occurred with that three candle I was talking about. And then it closed here. The next one is these people took out the structural liquidity. So their highest candle is this one, and then here. So which means that this is their inducement and their disruption. These things are structural liquidity. Let's look for the structural liquidity of the candle I talked about. Okay, there are a lot of it. It can occur in this pattern, closing below it, and next one closing above it, like this, or I'm just looking for something. Okay, very good. Now this one closed above this one. This one close below this one is a break of structure. You can see how this movement is now in another time frame. This movement is like this, This how this movement is. It's simply a structural liquidity. So this is what classifies an internal. So some people that actually, though I did not reply, I told you guys I've not been online and all of that, and I told you with the structure of the class, you have to ask some questions in while the class is ongoing. They're like 30 minutes or 15 minutes for that. Okay, so these are this is a simple structural liquidity inside this. Let's assume that this guy does not exist. This now becomes inducement and disruption. So this is structural liquidity. Now somebody now will now use this structural, for example, now this one now as inducement and use this one as disruption. Is not correct now. Why? This is not an inducement. It is not an internal. This is simply a structural liquidity. It did not take out any um it did not take out any structural liquidity over here, and it did not also create at least three structural liquidity. Why do we always use three? Remember in the range I said three. In qualities of external, I said three. Why am I always using three? Because three signifies where a particular trend fails. Don't forget that in this time frame, this can be inducement, but in another time frame, like 15 minutes, very 15-minute structure, this thing you call inducement here is like their own external, and because they scalp. So Three signifies a direct change of trend. How do I mean? Let's say they are on a downtrend like this. Once price takes out this guy one time and then it buys like three times, it is showing the strength of that particular trend. It has given them disruption, let us assume, inducement taken out, disruption taken out, and we are settling down to buy. That's what it's giving. That's what it's giving. So we always use three because in another time frame, it is just simply like a change of trend to them. Each time price takes out a structural liquidity, is like that's why I told you that the lower time frame is not very reliable because if this is your external, it means that what these guys are your internals that were taken out, or if this were disruption, this will be their inducement. So if this was their external, this will be their inducement, this will be their disruption, and price will take out their disruption. The only entry model they can use is the entry model I'll be teaching also. The entry model of when price takes out a point of interest with little or no reaction, comes back to that point of interest like this and then sells. So that's only what we save them. So lower time frame is good, okay, but it is not consistent, should be told. If you need a consistent time frame, do not go below 30 minutes. Excuse me. So yeah, let's proceed. So that being said, I've given the two types of the social liquidity. The second one can be your normal reconstruction. Now this one that occurred like this, normal, like the one that candles move upwards and move downwards like that, normal break of structure, but it is happening inside and internal. So write in your notebook the qualification of an external on probability it should sweep internal, sweep or slash take out an internal. Then the qualification of an internal on probability it should sweep slash or take out a structural liquidity and create a structural liquidity inside of it, the external, and create an internal inside of it. Three or more internal, three or more structural liquidities. Good and fine. So that is on that. Let's move on. Let's move on to today's topic, which is discount premium prices, POIs, and entry. Alright. So what is discount and premium zone? Now let me give a very, let's say a lame example, like people in the nursery school. If somebody wants to open a provision store, let's use Indomie instant noodles. Okay. Now the time where these people were doing the promo of buy one get one free or buy two get one free, something like that. Now that is buying in discount. Now let me say I don't know anybody's name here. Let me just check anybody. Let me use anybody's name. Okay, Farouk. Okay. Now let's say Farouk's elder sister wants to open a provision store. Unfortunately, the time his sister wants to open this shop is the time where Indomie they're actually doing a promo or a discount. Now she's opportune to buy a packet of Indomie for 200 naira instead of 250 naira. Now, it is said that she bought it on a discounted price. Now, if Farouk's elder sister buys love it, let's say she buys over like 30 to 40 cartons because she was buoyant enough and she felt like she needed to get it in demand. Okay, now let us say that now the price of Indomie goes higher to 300 naira, and Farouk's sister got these noodles at the rate of 200 naira and she sells it at 300 naira. She will make more profit than every other person. Why? Because she bought at a discounted price and she'll be selling at a premium price, which means that we have to always buy at discount and sell at premium. If you buy at premium and sell at discount, you are making a mistake. You're taking a loss. Because why? It is like Farouk's sister goes to the market and buy noodles at the rate of 500 naira per one packet, and then she sells it at 300 naira. How will she go to market the next day? She cannot go. She as well will not have a profit, and she would maybe not even have a capital. Okay, so in trading, it is also applicable. We have to buy at discount and sell at premium. Now we have, I explained to you guys, and I said if we have this disruption, this inducement, to be honest with you, without trying to sugarcoat anything, you have no business buying directly from here. Buying from here is a 30% win rate and probability, and whatever comes up is left for you. The only time where you can decide to buy from here is if something like this happens. That's where this discount and premium comes in. Now, this is Farouk's sister shop, and it was said that for her to be able to get noodles at that discounted rate, she has to measure. Let me set this guy. Color. Color filters. This is not bright again. There's something like that guy is gold. Okay, I put the same color. Okay, let's just use this. So now, how you measure this is we put this guy here and this guy here. Now, for Farouk's sister to buy at discount, she has to buy below this 0.5 percent or 50%, whatever you want to call it. Whatever you want to call it, 0.5, 50%, whatever you want to call it, there for you. I should just use one color for both of these things. Oh no. Okay, this is better. So now, below this place is, remember I said some, I don't know whether it's this class that I said something like, I don't know, is it this class? Is it this class? I said something about like last point of true mitigation, which means that there is a point where we can actually buy or sell before the last point of true mitigation. Okay, so we above this place now, sorry, below this is buy. I said buy, we are buying, so it has to be discount. Now, to buy, we have to buy at the most recent. I'm using one stone to shoot two birds. I'm going to talk about entries and POIs, and also be talking about discount and premium at the same time. Okay, now buying at the most recent point of interest, but at the demand zone before the last point of true mitigation. If you want to buy or sell using the premium and discount, it means that you are not buying directly after this inducement. You are buying after the inducement has been taken out with little or no reaction. When I mean little or no reaction, if this thing comes to this plate and it start moving up, it has been mitigated, it don't spoil, it's not valid anymore. It doesn't have to give a noticeable reaction. Either it's doing something like this and then coming down, or it's doing this one, nothing at all. Okay, so if it gives little or no reaction, your first point of interest is the discount zone, which is below. You're measuring this stuff below this place. The first demand zone you see, just right below the discount, the inducement, is your point of interest. Just below this your inducement is your point of interest. That is your first point of interest. But it must be in your discount zone. Now, the qualification of this your demand zone, which is where you should be buying from, should be number one, very, very important. It should be in your discount zone. And number two, it must be in line with the trend. It must be in your demand zone below here. Then it can be the last, if it's like this uptrend like this now, the last bearish candle you see there. Let's say we have bearish candle here before series of bullish candle. This bearish candle is now your point of interest. Compulsorily, it has to be below the 50%. That's your first criteria. So that just after, because I told you guys that price can sweep inducement and start moving immediately. So what is engineering that movement? It is simply that demand it happen. Then let us assume that you miss it. What next do you do? Allow price to come above the inducement that failed. Then this below this inducement, this point should be your new entry. Let's say you miss this, maybe you're not sure if it will tap on it or anything, whether it taps on it or not. Once it takes out a point that would have been a valid point of interest to every other person, once it takes it out, with little, supposedly little or no reaction. It doesn't have to go tap it and start going up and then it chases back again. No, little or no reaction. It takes it out, not with the weak, with the body, takes it out, little or no reaction. Either it taps on the first or the nearest point of interest, or it retraces after taking it out and goes above this. Let me try to drop something. Maybe it should serve. I think I have a very good diagram. I wanted to post it on Twitter today. I was really busy. Let me stop sharing my screen and set it up before I I do it. Because I'll posting it tomorrow and I want to just assume that when you see it, you are familiar with it because it's actually a game changer. So just a minute. I think I favorited it. A lot of people have names they call these things. I prefer not to give something a name. Okay, I just take it as it is. Whatever name anybody wants to give to it is actually not my business. I might be trading this and somebody might say this code blah blah blah. I will not even argue with you. So in case you trade it and then somebody say is this, don't even, we don't put points here. Okay, don't need to, just like talking is for market women. Your work is to make money, you don't have to say anything. So let me just give this example. Okay. Okay. Thank you. Okay. So let me share my screen again. Alright. So this is it. So it simply like takes out the point of interest. Whether it taps on this the nearest point of interest or not, he has to take it out, little or no reaction, goes above it and retraces back. Okay. Then in the process of you want to enter with the whole, don't forget this one he did here is the disruption he took out. This is the inducement. Okay, he can take out inducement, tap on the nearest point of interest, go back up, buy, or it can take out disruption itself. It is based on your own characteristics of a point of interest that will make you not trade this disruption in the first place. There are some, that's what I will tell you. People know your normal sweep or whatever. Okay, that is a valid reason why you should not take a trade. I'll get to that anyway. So now let's continue what I'll say. Now it can take out even an external. Okay, even an external can be taken out and it retraces above it and still buys. So both the inducement or this one, either of it can be taken out and it still buys. whole thing is take it out, then go above it. But if you're using the nearest POI kind of entry, then it has to fall in below the 50% or 0.5%, whatever. It has to fall below it. Okay, and then goes up. This placement doesn't have to be very big. Like some people might just like something as big here, and you're calling it that if it failed or something. No, no, no. Just be realistic. There's where it gets, so I know that that trade has gone, like doesn't want to hold. So you don't even have to waste your time waiting for it to come above the point of interest before you buy, because you on your own, normally if you calculate your SL from here, this is your protected low, no matter what you think. It's your protected low. So imagine put your SL here. Does that even make any sense? What's this? I mean, honestly, what that doesn't make any sense. So something better. You just use your common sense sometimes. Not everything they will teach you. You just know that this one will not work out. Okay. So it falls below the 50%, and then what we call before I forget. Now if you're using this as your entry, the nearest point of interest as your entry, remember that the last point of true mitigation is what we call this your disruption, which means that this guy is still your point of interest. The point of interest is simply the places you are marked out that you are interested in. You want to see what happens in those specific places. So the last point of true mitigation is still part of your point of interest, which means that even if this guy fails, there is still a possibility for a buy here, either directly or not directly. Directly in the sense that it fits your criteria, for example, the sweep people. If it doesn't fit your criteria, then you have to take it out before you enter. Now, I said it before that the best trades are gotten when early buyers are out of the market or early sellers. The best trades are gotten when people have been swept out of the market. That's when you get the best trades. Okay, so when the early buyers have left the market, I'm looking for something, so I'll just show you guys also, so you can also hear it yourself. Okay, so just listen. Trades occur after. So just listen to this. Don't know if it's clear. The best trades occur after the masses have been stopped out, and markets tend to move, and that's because the big fellas up there, they can't press the button and get in because there's just not enough liquidity there for them to get in size. So they have to, in fact, engineer 100,000 guys like you, sir. Your stop loss gets hit. That, in fact, sets off a sea of liquidity for them to get in. I don't know if you guys heard that. So what the man, as this is a very, very, very big trader. As a matter of fact, I think the man self is dead. So the best trades occur when the masses have been stopped out of the market, because the market needs a lot of liquidity to move. So you know how many stop losses will come after this guy has been taken out. Okay, you know how many stop losses are here. I know people that once they see strip of liquidity here, they don't even want to hear again. They have crowned it A plus. The Twitter traders, they have crowned it A plus, but it's not like that anymore. Maybe it was like that before I started trading, but right now, as a matter of fact, it has a very, very low win rate. That's why people had to re-strategize and get back test and get something better than what is rampant already. So we have the nearest point of interest, our entry, entering at this point should be after this point have been taken out. But entering directly here, it works. But the truth is, it is not consistent. I told my students, I told them that um, don't mistake luck for profitability. You can be lucky. I know somebody that doesn't know how to. I always have said it before. He doesn't know how to trade that much. Not even that much. Well, this guy doesn't know how to trade like that. But as a matter of fact, he passed phase one, passed phase two. What's going on? 50K account. Are you kidding me? Passed phase one and he passed phase two, but he could not withdraw. You cannot outsmart the system. You can be lucky one, two times. And the worst part about being lucky is that when you are lucky with the wrong thing, it builds your confidence in the wrong way and you feel like you are getting it. And then that is when your confidence is built, you increase your risk. That's where you hear people say that they lost this thousands of dollar to the market, they did this and they did that, they are in debt and all of this. It's because one or two times this thing actually worked for them so well. They had no option than to increase their risk. So when they did so, everything spoiled. I wouldn't want to go very far again. The next class will check all of this in the chat, and I think it's going to now end up with risk management techniques and the after that class. When I show this on the chat in the next class, I will cover it up with risk management as well. Then in the last after that class will be I think the last class, yeah, will be top down analysis and then one or two touches on stacking because I know most of you want to hear my view on that. So information stacking followed by that. It's not actually on the outline. I intentionally told him to remove it because that is not why I am here. So it's just like a by the way stuff, but learn how to trade consistently, not with luck. So you can go and practice this whichever way you can. And I think there's a part, I don't know if there's a part people converse. I don't know. I've never seen people talking in any of the groups. I think it's it's more like achievements they post. I've never really seen anybody talk about anything. So if there's a group for talking and I'm there, you can as well tag me and just drop it. I'll be going through it. And the few I can reply and respond to, I sure will. Like I said before, we are all human, so use the other person's um question or answer as your own answer as well. So let me take a few questions. Just raise up your hands and I'll pick you. Please be reasonable with your questions, please. Please, please, please. If you don't have any question, just forget about it and watch the video again. Please, I beg in the name of God. Okay? I beg in the name of God. If you know that you don't have any question, don't waste our time. If I omit you, please just
Thank you, Mark. Really sorry for what happened to you yesterday. So, what I want to ask is, if actually you have a 2 point of interest, as you said, at that discount zone.
yeah.
So,
2 point of
yes,
interest. Like this,
yes,
the most recent and the last point of true mitigation.
no, like 2 points of interest before that point of true mitigation.
No,
Then
no, no.
there
You
and one.
don't have to. It's either see was price when price is coming back. What price is coming back for is this to take liquidity. And the liquidity is this inducement. That's what that video was saying. Is this inducement. Now if it's coming back from this inducement, it is going to clear it and move. Okay, so the moment this guy, the nearest point of interest, price either snubbed it or takes it out, two things happens. If it takes it out, it will go above it and buy, or it takes it out, or it mitigates it and just buy like that. So it is either But surely what the market is coming for is the liquidity itself. Except if there are no so much liquidity, it just takes the most recent guy as liquidity as well, and then it buys from these people. You might have seen so many times price bought from disruption now, neglecting this guy. You will see it when a point of interest will not hold. You will see it. If it's not this thing, you will see it. Like if it's not this takes it out, goes up and mitigates it again, you will see it just keep moving, going down. Doesn't need to even go up again. Straight to the disruption. So you cannot have this and have another one below it. You're just gathering stop loss for yourself. Do you get me?
Okay, ma. Thank you.
Yeah. Monday.
Hello, ma. Hello.
Yeah.
O-
Yeah,
Okay,
if I
please.
hear you,
I want to ask a question.
I'm
If we want
listening.
to draw our premium and discount level now, should we be drawn from our external structure or the internal structure?
Draw from the internal, most especially from the point where you want to enter from, which is this disruption. Okay, you drawing here is not useful. You are not entering from here now. There is no good liquidity that can hold price from here. The only liquidity you can see at
Okay,
this
thank you, ma.
is simply structural liquidities. Those things are not very strong, though sometimes they help, but then they are not consistent. Yeah, yeah. The next person, if you raise up your hand, I've omitted you. Just ask your question, and then so we can give you a thank you. I've omitted a lot of
Can
people
I
that are
go
not.
ahead?
Yeah, sure.
Okay, thank you very much, Sabiigal. My question is, you talked about the nearest POI where we are expected to take our entry, and you said it's the demand zone. So in a situation where we don't have a valid demand zone, do you advise us to still trade it? Because you
No, no,
specifically said a demand zone.
no. If you don't have a valid demand zone, let it be. Allow price to take out this guy and then go above it. Then you place your entry there, or just wait at the disruption, which is the last point of true mitigation. Do you get me?
Yes, very clear. Thank you very much.
You're welcome. I've omitted a lot of people. Please speak or don't raise up your hands. Thank you.
Okay, good evening. Can you hear me?
Yeah, I can.
Okay, when marking our premium and discount zone, does it have to be from the recent break of structure?
Recent because also like this guy. No, I didn't mark it from there. I marked it from here.
Okay, like when price take that particular one out and create an inducement, we have to mark it from the recent one, like the one that broke the structure, that came down.
No, from your disruption where you take your entry from. If this one breaks, if this one goes like this now and breaks this high, this guy becomes invalid. This guy becomes the new inducement. This guy becomes the new disruption. You're marking your discount or premium is now going to be from this guy, not this guy again. Because as the order flow keeps moving, it abandons the other ones when it breaks a new high. As simple as that. Do you get me?
Yeah, yeah.
All right. Another person, any other question, please? I
Good
want me to
evening.
tell you.
Hello, good evening, ma.
I think somebody was talking before you. Sorry, please. Can you just wait, Emmanuel?
Okay, good
Okay.
evening.
Yeah.
Um,
Good evening.
the question I wanted to ask, like you've answered it partially in the previous question. I just
Okay.
want to like confirm, in a situation whereby price tapped into the nearest POI
Okay.
and did not take out that place and just start buying, is it
Okay.
that once price breaks the most recent high, does it make that disruption, does it make it invalid?
So it doesn't make it invalid. It doesn't.
Even if
This
it
place
breaks
now,
behind.
yes, this place now becomes a sweep. Here becomes a sweep. This guy is still valid until he breaks another one again. Because what he
Mm.
did was just to sweep it. Do you understand? They are still valid here.
All
Yeah.
right. Thank you.
Okay, the next person, please.
Hello, good evening.
Yeah, good evening.
Yeah, please, I have like three questions. The first one is about this premium and discounts. You said we are
Okay.
marking it from the disruption low. To what
Mm-hmm.
point? Is it the high that the disruption low created or the high of the inducement low?
Watch me. From here
Okay,
down to here is where you're marking. From here down to here. This
okay,
is last low that is for this break of structure. From this high down to this low is one. From here,
okay,
this place is one. So if you're marking, it should be from here down to this point. Do you get me?
okay, okay.
Yes.
Thank you. Then the next
Question.
one, sorry, please. The
All
next
right.
one is about, you said before we take an entry from and we should make sure that the inducement law is being taken out with little or no reaction. You know,
Yes.
sometimes price can actually induce people to think they are buying, and price moves for a while to their side. So how little should the reaction be? Do you have like a specification, like let's say at most one or two break of structure? If it exceeds that, then we should not consider buying below.
Well,
Yeah.
you know by yourself that there's a point price will sell and you know that price is not coming back again. This one now is
Yes.
personal preference. You know that there's a point this thing will go below and this point of
Okay.
interest is not valid again. Now, so once you feel like it has gone too far for you, the further it gets, the more risky. I use this SL as example. This is your
Okay.
protected loan. If you are putting your entry in this place here, imagine this thing goes far to this place. How do you want to fix your SL? So if you decide that okay, let me put it here, this is the whole point of interest for your SL. See where this thing stops.
Okay.
So the further it gets down, the more crazy the whole setup becomes. What's this?
Yeah.
This is like a profit for somebody else. Do you get me?
Yeah.
Most especially the people that trade and breaker block. This is like a
Okay.
profit to them. So it's invalid. Yeah, your third question.
The third one is about the structural liquidity. We know price is fractal. Can we also like foresee price change of character on an internal structure with a break of like inducement low and disruption low of a structural liquidity?
It depends on the time frame you are using. Okay, it
Yes, I
depends
know.
on
You
the time frame
sorry,
you
we
are
have
using.
like external, internal, and now you introduce structural to us this evening. Like I'm saying, is it possible to foresee the movement of internal with structural with
Is
the same
that one? Let
idea?
me tell you, that one is if you want to go to lower time frame. I told you
Okay,
that these lower time frames are not consistent. I'm being honest with you.
okay,
They
okay.
are very inconsistent. So the whole idea of 30 minutes as in one leg internal, I
Yeah,
said that in 5 minute time frame, that's okay. Let me use this 1 hour like this. In 5 minute time frame, those things are simply like their own internals for people that trade those lower time frame. Now, be very sincere to yourself. How many times have you seen price clear? Like all these things now, let's say those people consider these things as their internals and this last guy here as their external. You be honest with yourself. Don't you see price take out these things? So how many times does price respect this little bit of structures that are found inside the internal? So does it mean that if this was your entry, because this guy here is a structural liquidity, this is that candle
yeah,
type I talk about, this one here,
yeah,
this one is that candle type. So if this is and this one too is that candle type, if this is your internal
yeah.
inducement and this disruption, it means that the two of them are gone. So it is really, really
Yes.
inconsistent.
Okay.
Okay, it's really, really
Okay, I get it.
inconsistent because yes, exactly.
Thank you very much, man.
You're welcome. Yeah, another person. I omitted a lot of you. Please ask your questions and let's proceed. Thank you. I omitted a lot of you. Please ask your question. Let's proceed. Thank you.
Can I ask one question, please?
All right.
Okay, this question is on the inducement. In a situation where the inducement is far low into the discount zone, is very close to the is very, very, very low, close to the zero. Is it wise to take a trade like that?
If the inducement is what? Let me check. Wait, where is that thing that we're looking?
The the leg of the inducement is far, far percent into inside the discount zone.
It's even
Yes,
better.
something like that.
It's even
Yes.
better. It's better. Do you know why I said so? I told you that what price is coming for is this inducement. So if this inducement is even close to this zero, it's better for you because this zero becomes your nearest point of interest now. That where price will just clear the guy and touch it and move. So it's even better. In short, if your inducement falls below the 0.5%, this guy here has a good probability of holding and price not sweeping it before moving. That's one character to know when this point can be entered just immediately, like just entering it directly. Do you get? So if this inducement is below the 50%, the discount level, it gives this thing more edge. Like it all takes out this guy and move. Do you get me? So it's even better. It's better. It's you hardly see it, but when you see it, it hardly feels. Any other question? Any other person?
All right, good evening. Can you hear me?
Sorry. Yeah, Jupiter.
All right, thank you. So my question is based on the last class on range, and
Okay.
you said that after a change of character in maybe a 4 hour time frame, then after like three break of structure, that's when we can derive our range. So I want to ask, can we also relate it to like other time frames like 1 hour? Is it also applicable to other
One
time
hour
frames like 1 hour?
range. There's nothing like 1 hour range. Oh. Your range
Okay.
should be only gotten from the higher time frame. Yes.
All
There's
right.
nothing like 1 hour range.
All right. Thank you very much, ma.
You're welcome. Any other question, any other person? Let me tell you, please. Just stop so
Hello,
that
good
we can.
evening.
Good evening.
Yeah, sorry, please. I have. Is it like okay? Let me start with this. Can you please touch a little more on that structural liquidity? What exactly are we doing with the structural liquidity? And the way you explained it, I don't even know if I can get to point it out in a chart. Please, can you touch a little more on
Well,
it?
I will not show you in the chat now. I think okay, I showed you, but no, not too much. I showed the two examples. I see that they are break of structures that occurs inside an inducement. They are found inside an internal. These break of structures that are happening inside this internal now, inside this inducement, they are all structural liquidities. Now they can be found in two types. The one that happens with the candle. Let me use this as an example. Let me use this guy to cross on top of this. Now, if this does not work, let's say I will not teach again tomorrow or something, but I'm going to show you that this thing here, the movement is like this. This is how the movement is in 5 minute time. Let's see if they allow us to go down below 5 minute time frame. You will see that this thing that this candle closed above this one and the next one closed below it is simply a break of structure in another time frame. Now, this simplifies that this is a structural liquidity. They have two types. This type, there are a lot of candles moving up, and then a lot of candles come down, and it breaks structure. Or the one that is just made up of three candles, the one that closes below the previous candle, and the one that closes below it. The one close this is a cell. The one that closes above and the one that closes below. So let's check 5 minutes if it is as I said. Of course, You can see they are simple as that. It moved up here and then it moved down here. This is a break of structure here. But in that 30 minutes, it was identified in just 3 candles because 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, and so on. So 5 minutes, these candles were created. But the other candle, if you sum it up, is that 3 candle that is for the 30 minutes. If you calculate this whole 5 minutes, it's equal to those 3 candles for this 30 minutes over here. Simple as that. So this is one type of the structural liquidity, and the other type is when it doesn't have to be these 3 candles. It's just their own normal movement of so much candles that moves, and then even if their own, if you check in a more higher time frame, it will appear like these people here. So it's just like that. Your second question, please, if you have.
Okay. So, please, what is the relevance of the structural liquidity?
See, it is used to know
What are we using it
an
for?
it is used to know an internal. It is there so that you will know an
Internal, like before.
if there is no
Okay.
structural liquidity, there is no internal. It is just simply a movement like that. There has to be a structural. If these things did not come here, how would we know that this is an internal? These things have to come, like these things, these because structures here. Do you get?
Okay. I have sorry, one more question, please. So
Okay.
someone asked a question about the inducement being below the 0.5.
Okay.
Now, what of when the inducement is almost above the 0.5, like just a little something that was taught in the forex class, like
Like
efficient price action and inefficient price
like
action. When is
like it's
above?
like
When is above the
above here.
above the
Which
0.5?
okay, what happens? What's your
Can you
question?
take it up? Yeah, what I
What
mean, can it still be considered even as far as it is up there?
it,
If you
yes,
take it up more,
it is still called an inducement regardless. But
yes,
it will
yes.
better tap on the nearest point of interest than come down to this guy. And if it comes down to this guy, it will sweep this guy out and then buy, or sweeps the guy out and continue selling, because the main thing he came down for is this. The distance between this thing and this thing is too far. So instead of this thing to take out this thing, what else is he looking for? It to just tap on the nearest demand and buy. If that nearest demand cannot hold this trade, it means that he actually wants to either change trade or buy from this last point of true mitigation. Do you understand?
Yes. Okay. Can a demand be mitigated? How do we know a
Any other
demand
person?
that is mitigated?
A demand that is mitigated, France just have to tap on it and move now. Either tap on it, go in the direction, tap on it, or take it out. Mitigation, touching something. France has to just touch it to be mitigated. Any other
Can it be
question?
mitigated before price comes back to it?
Why? Once something is mitigated and price is coming back to it, there is a problem there. You have to run for your life.
Okay, thank you.
Okay.
My question is
Then
concerning the first pullback after the break of structure. Like how will you know
okay.
that first pullback is valid? Like is it candlestick or multiple?
What are you talking about? This thing? This pullback that happened here?
Like the first pullback after the break of structure. Yes. How are we going to know that it's
Talking
valid?
about this one?
Is it a single candle or multiple candlestick rejection?
What exactly are you talking about? Are you hearing me? Are you talking about this retracement here, this pullback that happened here? This you're talking about?
Yes. Yes.
How do you
Yes.
know if it's valid? It's simply as to either sweep a
Yes.
structural liquidity that is here in this other leg, and then create 3 or more structural liquidity, and make sure to break the previous high that was created. That's all.
Okay, thank you.
Okay. Any other question?
Hello, good evening, ma.
Second to last person. After this, I won't take any question again. I'm hearing you.
Yeah, I want to ask, is it possible for you to go on the chart and probably uh, explain more on the structure, how you mark out the structure on 4 hour time frame, then you come to your 1 hour time frame, then the entry, how you got that entry. If you can just explain it on the
That
chart.
is the top that analysis now. Don't worry yourself.
Okay,
Top down
okay.
analysis, like joining everything you have learned together from higher time frame down to the time frame where we take our entry.
Oh, all right, that's fine. Thank you.
Okay. The last question from anybody.
Good evening.
Where is best to
Good
get
evening.
entries, please?
Hello,
Yeah,
good evening.
there another person talk. We will get to that. Don't worry.
Good evening, the big guest.
Yeah.
Um, I want to ask a question. Like there's a in this scenario where you have a pullback
Okay.
and it breaks structure
Okay.
and have another pullback when price comes to sweep two of them and start buying too. Tap in the
And that's
nearest POI and start buying.
the same thing I said now. That's the same thing I said that even this disruption, price can take it out. I gave example with this one here. I said price can take out this disruption and then still buy.
Like
And
what I mean is, eh,
yeah,
there is the pullback before the break of structure.
a pullback before the break of structure.
Yes, inside, yeah, yes, and that your 50% now. There's a pullback there, and
Okay.
after breaking that high, there is a pullback there. After breaking that high, there is another pullback, and price comes to take two of them. There's another one below that has another block, and price comes to sweep two of them, tap on the other block, and start buying.
Eh, well, I've not really seen a lot of scenarios with that, but then if you can risk it, still risk it. It's left for
I've
you
I've
because
encountered that so many times, and I always get confused.
the reason why I said if you can risk it is because as far as this disruption is concerned, everything below this place here is called your point of interest because that's where you are looking out for. Okay, so if you can risk it, you know how many SL you will take if this one fails and you decide to take the next one. And let's say there are like two more demands. It's just like you because these things you are trading are simply just structural liquidities. So it's just like if this one was a one leg structure like their own 4 hours and then their first internal fails, you are buying from their disruption. That's just what it would be like. Okay, so if you can risk it, good and fine. If you cannot, I'll advise you to just wait at the extreme, which is
Okay,
this point.
thank you very much. Thank you very much. I appreciate.
So, any other question? Last one. I already said it's the last question, safe. I don't know why I'm still even. This is 10:29 p.m. I think it's over an hour and a lot of minutes. A lot. So we have to stop here for today. And I will see you guys tomorrow in tomorrow's class by the grace of God. So till tomorrow, good night and have a pleasant weekend.
All right,
Bye.
good night.
Sure.
Good night.